कोबरा पोस्ट के संपादक अनिरुद्ध बहल ने मंगलवार को कहा कि हमने चोलामंडलम इन्वेस्टमेंट एंड फाइनेंस कंपनी लिमिटेड और मुरुगप्पा ग्रुप की संबंधित कंपनियों में 10,000 करोड़ रुपए से अधिक का रिलेटेड पार्टी ट्रांजैक्शन पाया है, जो कि पूरी तरह से हितों के टकराव का मामला है। बहल ने कहा कि हमने जांच में पाया कि ऑडिटर्स काफी ज्यादा फीस ले रहे हैं। इससे कोई समस्या नहीं है, लेकिन ऑडिटर्स और रेटिंग देने वाली कंपनियों के साथ हितों का टकराव नहीं होना चाहिए। लगभग एक दशक से चोलामंडलम इन्वेस्टमेंट एंड फाइनेंस कंपनी लिमिटेड और मुरुगप्पा ग्रुप की संबंधित कंपनियों, यो परिवार के सदस्यों और प्रमुख मैनेजमेंट कर्मचारियों के नेटवर्क के जरिए 10,000 करोड़ रुपए से अधिक का रिलेटेड पार्टी ट्रांजैक्शन हुआ है, जिससे रेगुलेटरी और गवर्नेंस से जुड़ी चिंताएं बढ़ गई हैं। हमारी जांच से यह भी पता चलता है कि इन फंड्स का कुछ हिस्सा आगे और ट्रांजैक्शन के जरिए भेजा गया, जिनकी प्रकृति और मकसद की बारीकी से रेगुलेटरी जांच होनी चाहिए। जांच में यह भी पाया गया है कि चोलामंडलम इन्वेस्टमेंट एंड फाइनेंस कंपनी लिमिटेड ने पिछले 6 सालों में 14 बैंकों में 25,000 करोड़ रुपए से ज्यादा कैश जमा किए हैं। इनमें से 8 प्राइवेट संस्थाएं हैं और बाकी पब्लिक सेक्टर बैंक हैं। यह आंकड़े अनुमानित हैं, और अगर किसी सक्षम वैधानिक अथॉरिटी द्वारा इनकी जांच की जाती है तो इनमें बदलाव हो सकता है। कोब्रापोस्ट ने दावा किया कि उसकी जांच कानूनी फाइलिंग और पब्लिक डिस्क्लोजर की जांच पर आधारित है, जो भारत की सबसे बड़ी लिस्टेड नॉन बैंकिंग फाइनेंशियल कंपनियों में से एक चोलामंडलम इन्वेस्टमेंट एंड फाइनेंस कंपनी लिमिटेड से जुड़े बड़े कैश ट्रांजैक्शन, संदिग्ध रिलेटेड पार्टी अरेंजमेंट, चौंका चौंकाने वाले कानूनी खुलासे और कंप्लायंस गैप का एक चिंताजनक पैटर्न दिखाते हैं। उसके एनालिसिस में कुछ क्रेडिट रेटिंग एजेंसीज या ऑडिटिंग फर्म, ईशा फाउंडेशन जैसे नॉन प्रॉफिट संगठन सामने आए हैं, जिन्हें चोलामंडलम इन्वेस्टमेंट एंड फाइनेंस कंपनी लिमिटेड और मुरुगप्पा ग्रुप की दूसरी कंपनियों से फंड मिला है। हालांकि मुरुगप्पा ग्रुप ने स्टॉक एक्सचेंज फाइलिंग में इन आरोपों को बेबुनियाद बताकर खारिज कर दिया और इन्हें गलत इरादों का नतीजा बताया।
etc. You have a PAN number, you are there in civil, you have a civil score, etc. And how many times have you paid your installment or your EMI through cash? I guess none of you. I mean, at least I don't know of people who pay their installments in cash. So, but Chola claims that a lot of their credit comes back to them, repayment comes back to them in cash. So, which is very strange. This is a bit like a chit fund thing that we don't know who these guys are, whether their PAN numbers are linked to Aadhaar or not. Of course, that's a separate sort of conversation. So, it is a point for regulators to look into. The other point, of course, I'll take you through the slide. I'm just briefly regurgitating these points. Is about related party transactions. It's not a small thing. NBFC has taken loans from banks. It has a lot of public money with itself, and the regulation is there to see that the public money is going for the end purpose for which it has been sought, in which case lending for vehicle loans or home loans. That is the purpose of the money that has come to the NBFC, and it is a public money, so it has to be treated with a lot of regulation. So if you are using this money to pay big salaries to your promoter individuals, big salaries to your sister concerns, and not declaring these transactions, it's a big red herring about corporate governance, and it has happened to the tune of 10,000 crores. And I'll take you through the slideshow briefly, and then we'll come back and I'll take questions and I'll explain more. So here it is, Murugappa. It's a 125-year-old conglomerate, and the fund diversion we are talking about is of PICL, which is the flagship group of the NBFC. The 17 key companies in focus, some are financial entities, some are manufacturing, industrial, and other key entities, agriculture and trading. So we have divided this into several boxes. Investment and finance, this is the flagship. The shareholding pattern, promoters, FFI, DI, so basically promoters own nearly 51% or close to 50% of the shareholding. The debt mountain, they are not funded through equity placement, they are funded more by debts. So there's liability and there are borrowings till 2025. You can see 1,74,000 borrowings. Borrowings in 2019 alone were about 50,000. Where the money comes from, breaking down the 1.7 like about bank term loans, financial institutions, debentures, externals. We have broken down the whole where the money comes from. Irregularity, Cholamandalam crime, the liability, obviously the cash component which I just talked about, and fund diversion, which is undisclosed transactions of related party to family members violating several of these regulations, as I briefly told you, including the accounting standard of 24. The magnitude of the cash deposits. The staggering volume of the cash deposit is all largely since 19, and it has gone. This is post. This is during. Basically, if you see, we are talking about India going digital. And this is during COVID, as you know, a lot of these transactions, so basically cash transactions were nearly had gone down during COVID, but their cash deposits are increasing. In the bank breakup I've given you, ICICI Bank at the maximum 30,000 crores, upwards of that. Then of course State Bank and then other banks, etc., etc. Cash collection. First of all, customer defaults, cash collected deposited in bank accounts, field collection, time lag. So there are a lot of things that cash collection itself is a big red flag. Now I'm giving you a case study of a Axis Bank case study. Cash management CMS, the primary order involved thousands from Axis Bank itself in 3 consecutive years in 19 and 20 through about little less than 300 transactions, 1,539 crore were deposited. The primary method involving line peaked so much in 1920 through 971 separate entries in the account. The breakup of the Axis Bank deposit. In 1920, you can see the amount 1,539 crores, and then 2021, 22. I mean, it's going down, and other banks are taking over. I'm just showing. So clearly, IndusInd Bank, again, we have given you a breakup of how much money went to IndusInd Bank, total deposits. So basically, what I'm trying to tell you is that this is, if I take it at face value, I mentioned points about ECS, direct debit, digital payments. So basically, in a digital payment era, you are doing cash collections, and it shows that your credit quality is not good enough. And if your credit quality is not good enough, it's not reflected in the annual reports of Chola. Nowhere have they said that their turnover is so huge in cash. And nowhere have they mentioned ever that these 50 lakh corporators give them the money to they return the money in loans. I mean, nowhere have I at least read it in their annual reports or media reports. Nothing of that sort has come out. Then of course there's the income tax and KYC compliance that they have not done. Section 269T of the income tax expressly says that anything above 20,000 rupees has to be declared with PAN number and name, etc. And this compliance, to the best of our knowledge, has not happened over several years for Chola. Non-performance assets, of course, if there are delays, I mean, if you are sort of defaulting on a loan and you're paying in cash, all this has to reflect in your balance sheet and credit worthiness of the. Then comes the credit rating agency complicity. We talked about ratings, and ratings is and auditors. Now, mentioned briefly, if I am a rating agency and I am taking fees for ranking you or giving you rating A plus or whatever, whatever rating I am giving you, and my sister concern is taking professional fees. So there is a big conflict of interest. I'm not talking about the fees, I'm talking about this conflict of interest both with the rating agencies as well as auditors, where basically sister concerns of the rating agencies are taking in huge amounts of consultancy work, professional fees, and their other arm is doing their rating. Same thing with auditors. Your auditors are taking money for auditing the company and the sister concerns are taking professional fees. So is there a Chinese wall between the two, that the people who are doing the ranking or the auditing are not talking with the people who are doing professional consultancy for the group? And has the group declared it anywhere that this conflict of interest and have they addressed it? No. Multiple points of breakdown, as I said, the banking system, FIU, tax, rating agencies, auditors, RBI oversight about the banking violation. They're taking in so much cash. What kind of regulatory oversight is the RBI doing on this huge cash deposits? The banks are supposed to report suspicious transactions. If so much cash is coming into the system, and has the bank done the KYC of all the individual 50 lakh so-called truck operators who are putting in money in Chola? Cash collection, as I said, deposited without proper. It's a PMLA risk. If I don't know who has deposited this cash, it is a PMLA risk. Of course, unknown sources. Now let us come to the quantum of the diversion and related party transactions, more than 10,000 crores that I was talking about. This is a very interesting, the 3,040 crore insurance diversion. Let me just explain. Chola has a company, Chola General Insurance, which is 60% owned by Chola Holdings, which is a listed entity. And 40% the partner is Sumitomo of Japan. So what this company does without related party disclosures is that the premium it has earned, the earnings from the premium it has earned, it distributes 3,040 crores to 9 Chola Murugappa group entities, 9 or whatever, listed and unlisted. So it distributes as work contracts, it distributes as professional fees, it distributes as earnings to these. So this is at the cost of the minority shareholder, the Japanese Sumitomo, and also the shareholders of Chola Holding, which is a listed company, which owns 60% of this company. So you have basically diverted nearly 30% of the earnings of this country, close to 3,040 crores, to these other entities. So I've explained all this here. Insurance commission, the amount, 30%, professional fees, concealed related party, work contract. This is how the money has gone to other related party concerns of, related party transactions of Chola to these other Murugappa group companies without disclosures. So you have deceived the Japanese partner. It has international ramification, obviously, and it has this joint venture sort of structure. As a partner, Sumitomo was also entitled to these profits, but which would close as a 40% partner, which would be close to 1,200 crores. SPV is receiving insurance fund, Chola Business Services, and these are all other. Chola itself has earned a lot of insurance money by bundling sort of forced selling of insurance with their vehicle sales. Concealment only disclosure in its full service. So out of all this entire thing, they disclose only 116 crores out of 3,000. This entire insurance transaction, which Chola is now going and sort of thumping down. We have declared. I'm categorically saying that only 2,000 odd crores of it was declared as related party transactions, and in this particular instance, only about 116 crores out of this whole big amount. So there has been partial disclosure. We have combed through annual reports, we have combed through file line, and if they are misrepresenting that they have declared these related party transactions. They have not declared it till 21, and after that there has been partial disclosures. The fund diversion, as I said, Cholamandalam, Chola, where all exactly the commission flow to the related parties from 17 to 25, we have mapped that out. So this presentation will also be on the website, so you need not worry, you will get this PowerPoint. IDA violations, obviously, so IDA is, it directly concerns INDA. Insurance regulation is part of their related party. They are very strong on related party transactions. They have a whole code on that, and that is what is important to know. Of course, CFSL's own insurance commission, as I said, recorded a growth rate of nearly 127%, but as insurance commission. impact on the Japanese partner, which I've told you, holds 47%, but has got 0% of this particular 3,040 crores. Legal consequences. There are a lot of slides which talk about the legal consequences and the acts in question which they have violated. The Companies Act, the BNS section now 316/5, the SEBI Lodder regulations, failure to obtain audit committee and shareholder approval for a lot of these transactions, Indian accounting standards, etc. There's a whole box in our story about the accounting standards and how all this is related party transactions. I mean, it might look too dense to you, this whole related party business, but actually it is a very, SEBI is very strict about it. A lot of companies have been fined huge amounts of sum for related party transaction breaches, and for a listed entity to do that, it's not done. Explosive commission growth, as I said, cumulative premium, direct premium, this whole is mapped out. Unraveling the related party transactions further. We have detailed the names of the leadership circle, the promoter, the next generation, etc., etc. What constitutes fraud under Section 447 of the Companies Act? Fraud, wrongful gain, wrongful loss. Violations and criminal liability has been mapped out. This is all violations of the regulation and the Act. SEBI's Lodder regulations makes it mandatory disclosure requirements. Stock exchange disclosure there, periodic reporting has to be there, website publication, the annual reports have to suggest it. Annual reports, SEBI is very particular from till last year, which you have to file in SEBI now since last year, but earlier you have to file in detail in your annual reports. SEBI's enforcement powers, and so we have gone about compounding, criminal, I mean what exactly SEBI can do about this, the IDA regulations, what IDA can do, and the complete picture of the total diversion, right? Professional fees to related parties, 662 crores, Murugappa management services, 675 crores, work contracts, 1,654 crores, the diversion from Chola, 3,000 insurance, 3,040 crores, and of course CPSL diversion, 4,103 crores. Professional fees to related parties, 662. Let's talk about this. They are saying today, they mentioned briefly Chola, that Murugappa management services is no longer relevant to their, what did they say, they use something like strategic growth. Now Murugappa management, they received 663 crores over a period of time, and from 17 entities of Chola, Murugappa group, out of which several were listed. And they got this money, and 359 crores of this money goes to paying salaries and professional fees of the promoters, of the promoter entities, individuals. They are receiving huge salaries in crores and crores from this, and there has been no disclosure about it. MFS is also paying ICRA. What business has this company which is not listed to pay ICRA, which is rating Chola Financial? So obviously this was done at a hand, because a listed entity is under too much scrutiny. So they devised this method that, okay, let us create this SPV, which is our sister concern, and let us do these things from a sister concern, so there may not be too much regulatory scrutiny on that. I mean, here briefly I'm mentioning the amount of salaries that Aruna Gappan, chairman, 12.50 billion, and other family members. We are given the number of work. And so basically in Murugappa, another thing that has happened is people who are non-executive directors in Chola listed companies are drawing salaries to these companies, whether Murugappa Management Services or Chola Business Services, which will again come later. So basically, they are posing as an independent director in the board of Chola, but indirectly they are benefiting from here. So if they have been on various committees in Chola, what hat were they wearing? Were they wearing a non-executive hat, or were they wearing saying that we are taking no salary, but in the other company they are taking salaries? Work contracts as cover. So a lot of work contract recipients have been basically Parry Enterprises, other enterprises. Chola Business Services received 1,628 crores in a single year as a work contract in 18-19. The Chola Business Services is another. This is privately company used to divert more than 4,000 crores from Chola Financial. So what happens is Chola creates this, the sister concern, which is Chola Business Services. And Chola Business Services has a manpower contract with Chola Financial. And they get a huge amount of money. And they have on their roll thousands and thousands of people. We found at least 1,000 irregular workers' salary who are paid minimum, sort of little above minimum wage salary. First of all, what are these people doing? Thousands and thousands of minimum wage. And why isn't Chola directly employing them? Why does it have to have a manpower contract? And they have claimed deductions under income tax 80 JJA, our sources tell us. So which is basically every year if you have a 30% increase in employee base, you are entitled to certain deductions. And the total deductions which they have claimed are perhaps close to 180 crore. So which is a huge amount of money. And sometimes the workers are appearing in 1 year, they're disappearing, and they're again appearing after the third year. So basically, it is a systematic, what is it? And through this, they are also paying huge salaries to people. And also, they are using these so-called SPVs, these sister concerns, to pay big money to BCCI, IPL, religious foundations, which would have raised the eyebrows if it had gone through the listed entity. What business, your purpose of raising loans and public money is to lend to people. Your purpose is not to take huge salaries through related party transactions. Your purpose is not to give donations disguised as work contracts. Another thing they said in the morning was that no, it is normal these days to give CSR donations as work contracts. I have not heard about that. The 99% of the CSR donations goes as donations. They don't go as work contracts. So because you have to, as work contract means less scrutiny. Donation means you have to take approval from committees, from boards, and you have to say it is going, and you have to take a series of approvals internally. Work contract, and then you benefit from work contract because you can show it as an expense. Donation perhaps not. There's a qualifier there. The CBSL diversion, I have said. Here's the Chola ownership structure, where part of CBSL's money which they came, the salaries, then again Murugappa Management Services receives so much, Mysore Race Club gets 10 lakh. A lot of these bodies, a lot of these auto dealers, a lot of these bodies are receiving monies from indirectly from these two SPVs. Basically transactions which perhaps would have got a lot of scrutiny if they had done from the listed company. The bogus employee scheme which I talked about, 180 crores in tax deductions under section 80 JJA of the income tax for hiring additional employees subsidiary to RCFL. No tax deduction at source for 3 years, salaries paid annually. Our sources told us, and our review of certain documents. Employees paid at minimum wage level, etc., etc. Hundreds of unrelated employees. Then there is Murugappa Management Services, which I talked about briefly. The money comes through Murugappa Management Services from Coromandel International, CIFSL, EID Perry, Tube Investment. A lot of these are listed entities, and 13 other companies. From listed companies, money is coming to this private entity. Where is the money going? Top family beneficiaries: Ravi Chandran V, 55 crores over a period of time. Venkatachalam, 44 crores over a period of time. Murugan, 42.68. Murugappa, Villian Subiya, NAM Arunachalam. Look at the amounts that these individuals are coming in, none of it declared, mind you. The HR heads, this is a certain HR head, he got 54 crores in salary between 17-18 and 21-22. Other key management personnel, KMP, which we call them. I've mentioned the various amounts that they have got. Page 2, sport bodies, this being Madras Cricket Club, Chennai Super Kings, BCCI, etc. Total payment to the sporting organization about 3.59 crore. Rating agencies and auditors, let me briefly come back to this point. They were paid about 103 crores, but payment is not the issue here. It is conflict of interest. Payments to rating agency, ICRA for instance, got about 42 crores, including 73 lakhs in rent. Why is ICRA taking rent from India Ratings? 19.60 crore, 11 transactions. Then CRISIL, of course, we have mentioned the amount there. About 65 lakhs to sister concerns, again, which is conflict of interest. The ICRA. So, CIFSL pays ICRA rent of about 68 lakhs in both 1920 and 2021. Why would a finance company pay rent to a rating agency? It's a question to be asked. The rating versus reality. So, CRISIL's rating, short-term A1+, long-term CRISIL AA plus stable. It suggests financial health and low credit risk. The reality debt to equity ratio is from 5.90 went up to 7.40. Large revenue and cash deposits. Of course, did they know about this? Did the rating agencies know about it? Did the auditors know about it? I don't know. Auditing firms, revolving doors. So they have Deloitte coming in, then PwC Sundaram coming in, Balti Boy, Kare, etc. We have mapped all that out. Deloitte payments. Parent company serves as statutory auditor while a sister concern provides other services. Again, creating potential independence of concurrence. So we are basically not questioning the, we are mentioning the huge amount of fees. The conflict of interest is what sort of bothers us in the rating agencies. And so that basically we want rating agencies and auditor agencies to be independent and not be bothered, and not be accused of conflict of interest. We don't want any conflict of interest to come in their work, which if their sister concerns are taking professional fees, then it raises doubts, and a listed company should not be doing this. So Balti Boy was again, which is also now Ernst & Young. Given the, again now donations disguised as contracts. So you have mentioned Ishad, TN Tennis Association, Madras Canine Club, 16 other entities, Raipur Auto Dealers, etc., etc. Professional fees to Isha Foundations, nearly 9 crores. Questionable lending and missing charges. Now we have found that when a company, any company, private or public, lends to someone, it is supposed to file charges, which is to say that there's a lien, there's a particular charge. And we found a whole batch of 30-40 companies which haven't filed charges. So we don't know the credit quality or why they haven't. Why are they hiding this fact that they are taking loans from? They have to supposed to file charges. So it's a compliance thing, but it is there with a purpose. If the compliance is not done, it is not good. Charge register.